Building your business credit without using your social security number is a beautiful thing because it helps you preserve your personal life, your financial life, okay? And also helps you build business credit faster in terms of getting access to net 30 vendors, having business credit cards, business lines of credit, business loans, and all kinds of business credit programs. So in today's conversation, I want to really walk you through how to build business credit without using your social security number. First thing you need to understand, you need to know the basics. When we talk about business credit without using your social security number, you need to understand what's in your business credit report in the first place. So your business credit report only includes debts that are under your company's federal tax identification number, so your EIN. Okay, so any debts, any business lines of credit, any business credit card charges, anything that is under your EIN will be in your business credit report. So it's really important to understand that if you are able to separate your financial affairs properly from your business affairs, you are going to preserve your social security number and by way of consequence, your FICO score. And what we want to say here is that information that is present on your trade credit report is voluntarily sent to the reporting bureaus from the businesses that own the debt. Okay, it's voluntarily. In other words, you can have some net 30 vendors, or you can have some credit card issuers, you can have other players, other lenders who will not send any info to Dun and Bradstreet, to Experian credit score, or to Equifax business credit scores. Okay, so it is voluntary. And one thing I want you to really understand here is that you need to understand that besides lenders and creditors, several other parties may be interested in reviewing your business credit report. Business insurance companies, for example, they evaluate a business's report as part of the underwriting process. Customers and other businesses that are being considered for a joint venture or a partnership may also review your company's credit history before working with your business. So this is important. You have a constellation of stakeholders who are interested in your business credit report. By the way, boss, welcome back to the show. It's really a pleasure to have you here. And we want to quickly get into the nitty gritty here. And what I want to say here is that separating personal and business credit matters is really important because, again, you are preserving your personal life. You're preserving yourself in terms of legal liabilities if something were to happen. So you can actually just say, you know what, everything is for the company, not for my personal life. So this is important, and you're able to also have access to larger limits. After knowing the basic, the second thing I want you to do here is to get granular. When we talk about getting granular, I really want you to understand what is a business credit score. Before you can build a business credit score, before you can build business credit without using your social security number, you need to understand what a business credit score really is, okay? And when we talk about business credit scores, right now you have three business credit reporting agencies. You have Dun and Bradstreet, you have Equifax, and then you have Experian. For Dun and Bradstreet, they have something called the paydebt score. So your paydebt score goes from 0 to 100, and 80 is considered average or good, acceptable. You have also Experian, and you have Equifax. Okay, now the thing is that so in some cases you have something called FICO SBSS. So FICO scores for small businesses are known as FICO SBSS. Okay, so if you try to compare business credit to personal credit, you are likely to get frustrated. That's because business credit scores differ from consumer credit scores in some key ways. For example, the credit score range, right? Personal FICO scores goes from 300 to 850. But for the business, you are looking at 0 to 100. So paying on time to lenders and or creditors is the best thing you can do to establish a good business credit score. Number two, you have free scores. So there are over 150 places where consumers can check and monitor their consumer credit scores for free. But free business credit scores are available from a very limited number of sources. You also have access. So anyone can check a business's credit scores, unlike consumers' scores, which are restricted to anyone with a permissible purpose under federal law. Then you have the accuracy. So the thing is that 25% to 30% of business credit reports may contain errors or missing key information according to a Wall Street Journal report. Okay, so if the credit report contains mistakes, the scores produced may not accurately reflect the risk of the business. So this is why it's important for you to check your business credit score. By the way, boss, I'm explaining to you in today's conversation how to build business credit without using your social security number. Just want to quickly remind you today's topic, okay? The third thing I want you to do here is to understand the specifics. So when we talk about building your business credit without using your social security number, you need to understand factors that really go into your business credit scores in the first place. Because if you understand the input, you'll have a greater control over the output, right? If you understand how your business credit is built and maintained over time, you are more likely to avoid certain mistakes. You are more likely to do certain things that will help you faster and more positive, I would say, process that will help your business credit score go up over time. So the following factors may be used to calculate business credit scores, and each scoring model is different. So some of these factors may not carry much weight or may not be used at all. Remember that we have three major business credit scoring models. We have one from Dun & Bradstreet, another one from Equifax Business, and a third one from Experian. There are other models. So you have payment history. So if you want to build business credit without using your social security number, make sure that you are on top of your payment. Payment history must be stellar. It must be really clean. The age of your credit history will play an important role in helping you have a high business credit score. The debt and debt usage. Here we are speaking about things like the DTI, debt to income ratio. We're speaking about CUR, credit utilization ratio, for example. The industry risk. So if you are in an industry that is considered risky, quote unquote risky, by the credit, let's say by businesses in general or by scoring models in general, you are going to you are going to be penalized. It is just what it is. If you don't like it, you just need to choose another industry. I mean, some industries are considered high risk. Okay, for example, adults. For example, gambling. For example, marijuana. I mean, those are industries that inherently considered high risk industries. There's nothing you can do about that. Also, the company size plays an important role in making sure that you have a high business score or a low business score. So those are the elements: payment history, age of credit history, debt and debt usage, industry risk, and company size. I also want to talk to you about the fact that you can have you need to understand the range of what we're talking about here when we speak about building business credit without using your social security number. You need to understand the different types of business credit. Okay, I want to first talk to you about the Dun & Bradstreet. So you know the Dun & Bradstreet PDET score. So this is actually the one that's usually known in the industry. So the score ranges from 0 to 100 here. And basically, if you are around 80, you are considered an acceptable risk, okay? You also have the IntelliScore Plus from Experian. So Experian has what they call the IntelliScore Plus plan. And the score range here is similar to Dun & Bradstreet. In other words, the score goes from 0 to 100. And then you have the FICO Liquid Credit Small Business Scoring Service, the SBSS. Here, the score goes from 0 to 300. Then you have the Equifax Business Delinquency Risk Score that goes from 224 to 580. So it's really important to understand that, you have 4 major business scoring models. And these are some popular business credit scores. Just as there are many different versions of consumer credit scores, though, there are other business credit scores besides this. Just by checking these scores and making sure they are strong, you will be ahead of most business owners who never check or work on theirs, okay? So when we talk about, for example, the IntelliScore Plus from Experian, you need to understand that a higher score indicates lower, indicates lower risk. So as a business owner, you want to aim for a higher score. There are over 800 variables that can go into this scores, including trade line and collection information, public filings, new account activity, key financial ratios, and other performance indicators. But the bottom line is paying on time and managing debt well will help build a strong score without using your social security number. Boss, I want to quickly remind you of today's topic. We're having a conversation about how to build business credit without using your social security number. So I want to talk to you also about the FICO Liquid Credit SBSS Small Business Scoring Service. And so this rank orders applicants by their likelihood of making payments on time, and the score actually ranges from 0 to 300. The higher the score, the better. And the scoring can use both personal and business credit data and other financial information. So a strong history of business credit with timely payments to vendors and suppliers may help boost your SBSS score. And the SBSS score will be used for term loans, lines of credit, and commercial loans up to $350,000 from the Small Business Administration, the SBA. So fantastic, because the minimum score to pass the SBA's pre-screen process is currently 140. The next thing I want you to do here is to get the match right. What does that mean? This means that you have to ask yourself, as you are trying to build business credit without using your social security number, you need to know how business credit scores are used, okay? And you need to know who is using them in the first place. So lenders and other creditors need a means of determining how well your business repays debt before they will approve you for financing. This makes sense. And so this is where, if you really think about it, business credit scores come in. Higher scores indicates, let's say, to creditors that your business is more likely to pay bills on time, regardless of what's happening in your personal life with your social security number. So you want to improve the odds that you can obtain payments. You can obtain financing. So what you want to do here is that you need to, here, I want to show you 3 ways that business credit scores may be used to kind of help you get the type of financing that you need, right? You need, business credit scores may be used to determine your borrowing power, because your business credit report and score can determine how much financing you are able to secure, to determine your rates on business insurance. So some insurance providers evaluate a business owner's credit as well as the business's credit to determine rates on commercial insurance. And you have more time to pay. So vendors and suppliers may look at the business credit report and scores to decide how long to give the business before payment is due for goods and services. You probably heard about net 30 terms. Okay, sometimes you have net 45 and net 60 for that matter. So net 30 terms would mean your business has 30 days to pay, while next 60 terms gives you 60 days to pay. So securing longer terms on your terms with suppliers is a great way to improve cash flow when you really think about it, because you have more time to actually plan your liquidity inflows and outflows. What you want to do here is, if you want to build business credit without using your social security number, you need to monitor stuff. And when we talk about monitoring stuff, it means that you have to be in a situation where you are constantly tracking your business credit score. And the reason is that there are a lot of things, as I said before, you have the element of errors. So the element of errors there, so there could be some erroneous data on your business credit report. So the more you track it, the more often you track it, the better. You also have the ability to see if some data are being reported. So if there are some vendors who are not reporting data to your business credit report, you want to maybe let them know that you would appreciate it if they can report the data. You also have the ability to use your business credit scores to let's say, to secure larger financing arrangements. Okay. And what's really important to understand here is that there are a lot of reasons why you want to check your business credit scores, especially if you don't want to use your social security number. What you want to do here is that you want to have a plan where, let's say, you are paying like Dun & Bradstreet, for example, or you were paying Experian, for example, or FICO Business Services to have a clear idea what's happening in your business credit report. Why? Because mistakes happen. Your business credit may be mixed up with that of another business, or one of your vendors or lenders may report incorrect information. So if you don't check, you won't know. Credit scores change. Every time new information is reported by your lenders and vendors, your credit reports and scores may change. And fraud can occur, right? Business credit fraud or identity theft is a growing problem and may result in negative information on your report. So monitoring your credit can alert you to suspicious activity. You are also able to get better financing, boss. So what you want to do here is that you are able to have a higher credit score, which will increase your ability to get larger and more prompt financing from banks, credit unions, alternative lenders, and online lenders. So overall, this is a win-win-win for you. Also, you are able to improve your credit score over time. So if you are building your credit score properly, you have all the tools and capabilities to improve your credit score all the time. Now, when we talk about improving your business credit score without using your social security number, the very first thing you want to do here is to pay on time. I don't care how you make it happen, but find a way to make your payments on time so that you can secure a higher probability of having a high business credit score. Paying on time actually accounts for about 50 to 60% of your credit score. So paying on time and managing your debt responsibly. When we talk about managing your debt responsibly, we are speaking about keeping your debts low relative to your income. For example, your DTI, your debt to income ratio, must be low. Don't take on too much debt, okay? And this will help you actually preserve the non-social security part of this business credit score. In other words, more vendors, more lenders, more business lenders, more net 30, more vendors will want to do business with you on an EIN only basis. In other words, they will forget about the social security part of things, and they will grant you business credit based on your employer identification number, your EIN. And what I want to say here is that you want to be able to improve your credit score all the time, and you want to also sign up for those services whereby you are able to check your credit score, your business credit scores, right? So Dun & Bradstreet has a service like this. So does Experian, and so does Equifax. You have to pay for them though. But honestly, when you think about when you look at the overall things, like the grand scheme of things, it is worth it. Like paying $40 a month to monitor your business credit score, for example, from Dun & Bradstreet, it's a good investment with a higher ROI, because when you apply for a business loan, when you apply for a business credit card and you get granted a limit of $30,000, $50,000, or you get a business loan of $250,000, we're not speaking here about $40 anymore. We're speaking about hundreds. We're talking about tens of thousands of dollars. So, the delta there is in your favor. So this is why you want to monitor your business credit score and report consistently. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about how to build business credit without using your social security number. And so here's a recap. You need to know the basics, get granular, understand specifics, get the match right, and monitor stuff consistently. Thank you. God bless you. I'll see you another time. But until then, remember, stay marvelous.